Good evening, everyone, and thank you for making time to join this session. As you already may be aware, the purpose of this boot camp is to ensure that everybody on here develops structured competence in blockchain fundamentals, anti-money laundering and countering financing of terrorism, and digital asset compliance. In fact, we intend to produce a 4 series for this particular program, and we're starting with blockchain fundamentals tonight. The model we are using is a peer-led learning structure, peer-led one, where one facilitator leads the session while others like us will challenge the ideas and deepen the discussion. So as the facilitator goes on with his presentation, we would make time to address issues and questions that may come up. The objective is simple. By the end of this cycle, I mean the 4-week cycle beginning tonight, we expect that everyone here is able to confidently explain the concepts that we'll be teaching in these episodes. Like I've already mentioned, tonight's focus is blockchain fundamentals, which forms the foundation for everything else we'll discuss in the coming weeks. So I expect each and every one of us to be attentive while the facilitator proceeds with his lecture. So it's already 7:04. So I'll not waste much time. I don't want to call on the facilitator to proceed with the business of the day. And he's in the person of Mr. Adontin Boati India. He's a blockchain enthusiast and a cybersecurity scholar. So I don't think you have the floor now.
Yeah, thank you, Nana. Let me share my screen. Hello, everyone. Good evening once again, and thanks for joining. I will share my screen. Okay. Okay. Yeah. I hope my screen is visible. Hello.
I can't see it.
You can't see it.
No, I can't see it. I don't know about the others.
It was up, but I just went off.
Okay.
Yeah, it's up now. I don't know for the others.
All right. Thank you. Okay. So before we proceed, it's important that we understand that we live in a world where even our fridges can even send us reminders to buy milk when we are in shortage. And that is Internet of Things. Devices are connected and communicating automatically. Now, imagine money and value moving the same way, digitally, instantly, across borders without banks. And that is blockchain. And there is a common myth that we want to also deal with in the course of this bootcamp, that blockchain transactions are not traceable. In reality, most public blockchains are fully transparent. every transaction is permanently recorded and can be analyzed with the right skills and training. And one interesting fact is that according to AAA, a digital currency firm, as at 2023, blockchain has seen an adoption rate of 34%, spanning over 420 million people globally owning cryptocurrency, and billions of dollars moving daily across blockchain network. So whether you are in banking, compliance, law enforcement, a business person, this technology already affects you. So it is imperative for us to understand that blockchain is no longer option, or whether who likes it or who doesn't. It has become essential. So it is important that we get to understand how blockchain works. So before I proceed, we'll have to look at what today's session is all about. And with today's session, we are going to talk about understanding blockchain architecture and the concept of consensus mechanism. We will also look into wallets. What are they? What are some of the types? We also look at key management, like the private and the public keys. We will also move on to distinguishing between centralized exchanges and decentralized exchanges, as well as VAPs, what is known as virtual asset service providers. And from there, we'll look at identifying some AML risks in digital assets and how that can be resolved. So without further ado, let's begin. So we
All right. So
begin
before we proceed, I don't think if you can spare me a second, I'd like to put this across. This is not meant to be a lecture. We want participation, and so I will occasionally pause the discussion to invite questions or ask someone to explain a concept in their own words. So I just want participants to be guided. Thank you.
So, okay. So we continue. So as we can rightly see, you say blockchain is a digital ledger that records transaction in secure, transparent, and permanent way. So basically, it's like a database of records and transaction, which is validated and maintained by a network of computers around the world. So basically, that is what blockchain means. We have some key characteristics or core features. We have immutability, which basically means that once transaction happens or once data is written, it cannot be changed. And we also have a distributed ledger, which means that everyone on the network has a copy of transaction that has happened on the network. And we have transparency. So transparency in blockchain means that all transactions recorded on the blockchain are publicly visible and can be verified by anyone on the network. We have decentralization, which basically means that there is no central authority. The distribution of authority and data across the network or across a peer-to-peer network, eliminating the need for a single or a central governing body or a third party or an intermediary, whatever way you would want to put it. And the next one has to do with cryptographic security. Now, blockchain uses an advanced mathematical algorithm and digital signatures to protect data integrity on the network, verify identity of its users, and secure transactions from unauthorized access. And if you understand cryptography, basically in security, cryptography is what is used to protect, encrypt data, and protect data from unauthorized access. Then we will look at consensus mechanism. Now, consensus mechanism is basically a protocol that allows all participants in a network to agree on the current state of the ledger without relying on a third party. Let me cite a clear example. So basically, imagine we all as a group and we decide to buy something and share expenses. Before writing the payment in the records book, like the ledger that we mentioned in the definition of the blockchain, everyone must agree that payment has really happened. That agreement process is called what is called consensus. And there are basically two popular consensus mechanism, which are what we call the proof of work and the proof of stake. With the proof of work, people compete by solving complex puzzles. The first person to solve it add to the blocks and get reward. I will come back to the blocks and explain all that. So let's note that. And we also have the proof of stake. So the system chooses someone to add to the block based on how much money or tokens or coins they have logged in the system. So let's move forward. I hope the consensus mechanism explanation is clear, because basically what happens, everything that happens in the blockchain relies on the consensus mechanism. So if anybody needs further explanation, the person can let me know before I can continue. Okay, so we are good. Okay. Now let's look at the types of blockchain. So we have the public blockchain, we have the private, we have the hybrid, and the consortium. So with the public blockchain, which falls here under the permissionless, anyone can join the network, validate transaction, and view data. Key features include being fully decentralized, because there is no central authority when it comes to permissionless or the public blockchain, and it is highly transparent. So notable examples of these open networks are like the most popular one, the Bitcoin, the Ethereum, the Solana, and the others. And we have that of the hybrid, which is more like a mixed model of the public and the private, and mainly controlled by one central authority with some permissionless process and some permission process. So basically, with the hybrid, some data is public and transparent, while sensitive data remains private and controlled. So that is the hybrid. And to give a clear example, you can think of it as a company's website. Yeah. The public pages that are visible to everyone, pages that are visible to clients and all that. There are pages, that is the public pages, and there are internal pages that are only visible to staff. So a hybrid blockchain works the same way. Then the next one is the private blockchain, controlled by one organization or one authority, only approved participants, or only approved participant can join the network, and valid transaction used by enterprises for internal system. So examples are the Ripple on the IBM hedge ledger that you can see here. And key features is that central authority exists. And because it is not open to the general public, transactions happen faster, and restrictions are visible. The next one is the consortium, which is controlled by group or controlled by a group of organizations rather than one. Common in industries like banking and supply chain. So some of the notable platforms include the Quorum and the Corda R3, as well as the Hyperledger. Okay. So next, let's look at the blockchain architecture. So the blockchain architecture consists of distributed ledger, blocks, the chain, the nodes, and the consensus mechanism that we talk about. The blocks store transaction, all transactions that happens on the blockchain. The chain links them. The node maintains
Can
the
you
system.
please hold on, I don't think Philip's hand is up. I believe he has a
Okay.
question. Philip.
Yeah. All right. Please, thank you very much. I don't think, please, can you go back to the previous slide? Alex, I want to get some clarity on something. All right. Thank you. So, I'm seeing the CUDA R3 around the CUDA R3 and the Quorum. Then the Hyperledger beneath the hybrid session. Yes, where your mouse, your cursor is.
Yeah.
And also it's at the right side.
The
Yes.
Hyperledger
So
is also here.
yes. So I wanted to know the correlation between these Quorum, CUDA thread, and Hyperledger. And also another thing is the private and the consortium. Is it that I want to get clarity on that one too? The private, so I have a private institution.
Mm-hmm.
Am I a private? Am I operating as private or operating as consortium? It's a company and it's private. I want to understand how that one also works. Thank you very much.
Okay, thank you. So basically, what is meant by here is that, so you can see that the categories are two here. We have some is permissionless. So basically, it does not require any form of permission to be part of that network. And we have the permissioned. So the hybrid, as you can see, the Quorum and the Corda R3. So one way or the other, these technologies or this network has some form of it's more of a hybrid thing. So, like we said, this is controlled by group, right? In the case of consortium. Now, okay, let me talk on the second question, which is the private and consortium, to help you understand clearly. So basically, what I said was that the private blockchain is controlled by one organization, and only approved participants can access that network and validate transaction. Now, in the case of consortium, it is controlled by a group of organizations rather than one, as in the case of private. It's controlled by a group. Do you get where I'm going?
Yeah, I'm getting it. So okay, so if I'm getting you right, the private could be in the sense of, let's say, a banking application, a banking core application.
Yes.
Is that what I'm getting?
Yeah.
Where it's
Yes,
only the
basically.
okay.
Yeah.
Thank you.
Yeah. So in the case of consortium, when I was talking, I mentioned that it is common in industries like banking, right? So whereby two banks decided to use one platform to transact their business. I don't know if you get what I'm saying. So
Okay, I get that side.
So it might
So
belong to.
can we say sorry, I'm not cutting you, sorry.
Oh, no worries.
Can we say so for the consortium, can we say the GIFS platform is also a form of consortium?
Which platform?
The GIFS, where other banks do interoperation. Okay, so let's say the mobile money
Yes.
interoperation.
Okay.
Okay.
Yeah, the
Thank
mobile
you very
money
much.
interoperability and all that. Yeah, that. Yes.
Thank you.
Okay.
I'm clear.
All right. So in the blockchain structure, we have mentioned distributed ledger that it consists of a distributed ledger. Now, let me explain the distributed ledger and cite a clear example. A distributed ledger is a record of transaction shared across the many computers. If you remember the definition of blockchain, instead of many computers, instead of stored in one central place, instead of storing it in one central place, transactions are not stored in one central place. So basically, everyone in the network keeps the same copy of the transactions that has happened. So a clear example may be that imagine a class where every student has the same notebook. Whenever the teacher writes a note, everyone is supposed to copy it. If a student changes their note or some part of the note that the teacher has written for him or her to copy, the others will notice it immediately. That shared note system is like a distributed ledger. Have I made myself clear? Hello?
Yeah.
Okay. So we'll move to the blocks, what the blocks is. So basically, a block is like a container that stores the group of transactions, right? And it records the time of transactions and the digital fingerprint of the transaction. So you can think of it as like a page in the ledger. Each page lists several transactions. So when the page is full, it is sealed and a new page begins. So in the case of the chain is how blocks are linked together using cryptography, using that mathematical algorithms. Each block contains the fingerprint of the previous one. So let's say block A has a hash value of, let's say, ABC, and block B. So the block B will keep the hash value of the block A, which is ABC. So in case anyone on the network decide to edit or make changes to that of block A, it can be, it can be verified that changes or it has been tampered with. So these are some of the reasons what makes blockchain so secure. And the nodes basically are the computers connected to the blockchain network. So these computers are basically, let me say, are like the people on the network, or let me use, let's think of it, a node as referees in football match. Eh? Many referees, many referees are watching the game at the same time. So let's say if one referee or the referee on the field makes a wrong call, others correct him so that it can prevent cheating. So basically, that is the function of the nodes. And like I mentioned about the consensus mechanism, it ensures everyone agrees. So it's a process used by the network to agree that a transaction is valid before adding it to the blockchain. Since there is no central authority, the network in itself, like everybody on the network, like the students and their notebook, they must verify that this is the correct notes. So that is what that agreement is what is called the consensus mechanism. Can we move on if there is no question?
I don't think, please, can you go over what the consensus mechanism means, please?
Yes. And as well as the chain, I need you to go over what the chain is because it wasn't clear.
Okay. Okay, let me use examples. Okay. In the case of the chain, imagine numbered exam papers are stapled together, right? If someone removes or change one paper, the numbering no longer makes sense. Like if someone removes, let's say we have page 1, 2, 3, and someone removes page 2. Clearly, you will see that page 2, you can verify that there is page 1, there is no page 2, but there is page 3. So the numbering system in the blockchain, the numbering system is the blockchain chain. Let me put it that way. That does it make sense?
Yeah, it gives a little more overview. But what I'm actually, I think, let me ask the question. So my confusion is coming from the fact that you are saying that this information is stored on computers. Again, I joined this this master class or this session with the context that you didn't need to have any prior understanding before you got here. And so I'm
Yeah.
coming from no prior understanding. Now you're saying that the information is distributed across computers. Are you
Yeah.
talking about, like, should I envisage it in the context of a first, or you're talking about actual computers? Because for a
You,
network, usually there is a server,
yeah.
right,
Yeah.
that
Yeah.
devices are connected to. But it sounds to me like this is a network, but there is no single server,
Yes,
and
there's no single server.
bits of the server are contained in the machines themselves.
Yes, bits of the server are
So
contained in the
yes,
machines
you could,
themselves, the
please.
machines on
I'm
the
listening.
network. Yeah. Yeah. Do you need
Sorry.
further
So
clarification?
if the things are the bits of the server are contained within. Sorry, I didn't hear you. I think you must have dropped.
Okay. So basically, I mentioned that. Okay, let's take the notes for instance. The notes on the computer, the notes on the blockchain network. I mentioned that they are computer networks. The computers
No, you
connected
said
to the blockchain network.
computers.
Computers. The nodes are computers connected to the blockchain network. Yes. So these computers basically forms the network, right? So in the case of the chain is how blocks are linked together using cryptography.
Okay. So it's the sequence of the computers that is the chain. Is that what you're
Yes,
saying?
yes, the sequence of it, yes. So I cite example that let's say we have a block A with a fingerprint or a hash value of, let's say, ABC. Block B keeps the hash value of the block A, so that in case the block A is tampered with or anything, it can clearly be identified that this has been tampered with.
So block C contains both of block A and block B.
No, block C will contain that of block A. Block C will contain that of block B. Sorry, block C will contain that of block the previous one,
Right.
which is the block B. Yes. I hope I'm not confusing you.
Okay. It will do for now. Thank you.
Okay. And Nana was asking about the consensus mechanism, right? Nana? Hello, Nana?
Yes. So I wanted you to go over what the consensus mechanism means. I didn't get that quite clearly.
Okay, so the consensus mechanism is the process used by the network to agree transaction is valid before adding it to the blockchain. You know, transaction has to be agreed upon. So I mentioned that earlier on, I mentioned that imagine a group of friends sharing expenses, right? Before we decide to write it down, let's say in the ledger, in the definition of the blockchain, before we write it down in that book, everyone must agree that payment has really happened. The agreement process is what is called the consensus, if I make myself clear. Anna?
Yes, I get it now. You can proceed.
Okay. Yeah, so we move on to what wallets are. A blockchain wallet is a digital tool that allows you to store, send, receive, and manage cryptocurrencies, such as those on the Bitcoin and the Ethereum network. Now, mind you, I mentioned that it allows you to store, but I didn't say it stores money. It's important to note that a blockchain wallet does not actually store, the wallet does not store. I want you to understand that the blockchain in itself is different from the wallet. So you need to understand that the blockchain does not store the coins in itself or the money in itself. Instead, it stores your cryptographic keys, like the private key. From here, we will go to that, the private key and the public key that you use in your transactions. So that one proves the cryptographic keys, which is the public and the private keys, proves your ownership of assets recorded on the blockchain. So let's look at the core functions of the blockchain wallet. So like I mentioned earlier, it stores your key, which is the public key. And the public key is basically like an account number or your mobile money number or any form of address people can send money to. Anything that you be in your Zelle app or whatever app that you are using. The public key is basically like an account number. And the private key is like your password that proves ownership and also helps you to authorize your transaction. So it creates blockchain addresses. So the wallet software generates addresses derived from your public key. And 3, it signs transaction. Okay, so when you send crypto, your wallet uses your private key to create a digital signature. the network verifies the signature before recording the transaction. The blockchain network, it verifies to see that, okay, this is Ofebia or this is Nana before recording the transaction. Now, it also interacts with the blockchain. That is what the wallet do. One basic feature of the wallet, that it interacts with the blockchain. So it serves as a bridge between the user and the blockchain platform. The wallet read balances from the ledger on the blockchain, and blockers sign transaction to the network. And the broadcast here means, as I mentioned, that there are nodes or computers on the network. So everybody needs to know that, okay, this is the transaction that has happened. Okay, so let's look at the types. Oh, I want. Okay, so we have two types, which is the hot wallet. So these are wallets that are connected to the internet. So we have the mobile app installed on smartphones, like the Trust wallet, the Coinbase wallet, and others. And we also have the web wallet, accessible through web browser. So you open your Chrome browser, then you put in like blockchain.com, and you access blockchain.com. You access your wallet on blockchain.com. And we also have browser extensions, like this one, to use for Web3 and decentralized apps. Basically, browser extensions, we all use extensions like IDM to make downloads, which are all browser extensions. So, and for those into research, browsers like Medley, these are all extensions that helps you, in your activities as a researcher. So you, on your browser, you go to extensions, then you can download these extensions. So we move on to the next one, which is the cold wallet. So in the case of the cold wallets, they are not, unlike the hot wallet, they are not connected to the internet. So making them more secured. So they are physical devices that stores your key, which is both the private and the public key offline. So examples of them are the ledger and the trezor, as you can see here. Okay, so next, let's look in detail the public and the private key.
Someone's hand is up. Michael's hand is up.
Oh, sorry. Okay, Mike. Yeah. Mike, let me hear from you. Hello, Mike. Hello, Michael. Okay. It seems he's having a bit of a network challenge, so let's proceed. If he comes back then. So let's look at the public and the private keys. So, like I mentioned earlier, like the public key is basically like your bank account or your mobile money number or any account that you can use to receive number. It's a long string of letters and numbers. So you give this to people and they can send you cryptocurrency. And for the public key is basically safe to share. And the private key is the signature. a secret code that proves you own the fund. So it can be your password, your PIN, or your digital signature. So you use this to approve or sign your transaction. And it's not appropriate to share this one. Are we good? Okay. So let's look at transactions. Um, a transaction is a
Okay, so I
digital.
don't think before you proceed with the insights on what transaction is, I'd
Yeah.
like us to take a few minutes to hear from Trauma. As many of you may already know, Trauma has been instrumental in advancing our work around cryptocurrency compliance and financial crime investigations. She will briefly speak about the Certified Cryptocurrency Compliance Specialist Certificate conferment, which is scheduled for tomorrow, and what it means for those of us who participated in the program. It's an important, of course, milestone for many professionals who are building competence in digital assets compliance and anti-money laundering and countering the financing of terrorism practice. So, Trauma, over to you.
Oh, I didn't know I'll record now, but it's okay. Um, Hello everyone. It's good to be here. My name is Choma Onikelu, and blockchain forensic specialist at A&D Forensics. I'm trying to just see if I can pull the flyer for the event tomorrow. But what we're doing tomorrow is called the 3CS conferment ceremony. And the idea is that some persons have actually gone through a rigorous 5 days training. It's actually like it's not a boot camp, but it's a crash course kind of. And the idea was to be able to go through the modules. We have 5 modules in the course. Module 1 is more like the beginning, blockchain and cryptocurrency intuition. And then we have module 2, which talked about financial crimes that can be committed with cryptocurrencies. And then in module 3, we talked about the cryptocurrency laws and regulations in different continents and then different jurisdictions because they keep changing. And then in module 4, we went deep dive into what the crypto compliance is really, right? And then module 5, we talked about the tools. And this certification makes them to become certified cryptocurrency compliance specialists. So tomorrow they will be conferred to become certified cryptocurrency compliance specialists, and is an open event. And I want to encourage all of us to please be in attendance to join in the ceremony. The time is 11 a.m. West African time, which means it's 10 a.m. Ghanaian time, and that's like 1 p.m. Kenya time. And then I don't know, I think I saw people from Zambia in this call. So please just try and attend. Probably before we leave, I could just share the screen and show you the flyer. For all of us in the group, the link is already there and it will be shared again for people that joined today. All right. So if there are questions around that, we'll take it at the end of the session. Thank you, Nana, for the opportunity. Thank you. All right, you can continue.
All right. So, thank you very much, Trauma, for those remarks. And congratulations to everyone who will be receiving the certificates tomorrow. And with this, I'd like to call on Adontain to proceed with the presentation. Thank you.
Okay. Okay. So So I hope we are clear on the public and the private keys. So if you are clear, then we can move to transactions. Yeah. So in the case of transactions, I mentioned earlier that yes, it's a digital message signed by a private key that tells the blockchain to move value from one address to another. So they are basically three components. That is the input. The input is the sender's address, the output is the receiver's address, and there is a fee, the fee or gas, or basically what we call gas fee. The gas fee is a small payment to the network to process your request. So a clear example is that, let's say Akosi wants to send 5 tokens to Nana. Akosi has to open his wallet and paste Nana's public address. Now, once Akosi clicks send, his wallet will use his private key to digitally sign the message. The network will also have to check the signature. If it matches that of Akosi, then it will verify that the 5 tokens can move from Akosi's address to that of Nana. So yeah, so basically that is transaction. Let's move on to the next one. Let's look at exchanges and virtual asset providers. So a crypto exchange is online platform where people buy, sell, or trade cryptocurrencies like Bitcoin or Ethereum. So we have a centralized exchange and we have decentralized exchange. For a centralized exchange is a cryptocurrency trading platform that is owned and managed by a company. The company uses let me cite example. Example are Bitcoin and Coinbase. You create your account, you go through what is termed as know your client, that is KYC. You submit your ID, you deposit money. The exchange holds your funds where you buy or sell. The exchange matches your order internally with someone that is selling. So basically, in the case of a centralized exchange, it's like a middleman. The centralized exchange becomes a middleman in this case. So let's say you deposit 1,000 cedis on Binance to buy Bitcoin. Binance hold your money, then Binance execute the trade. So Binance store your Bitcoin in its wallet unless you withdraw it. So that is that for the centralized exchange. And for the decentralized exchange, is also a trading platform that runs directly on the blockchain platform using smart contracts. Going forward, we will talk about smart contracts. Maybe in our next episode and all that. So for decentralized exchange, there is no central company controlling your funds, unlike the centralized exchange. So we have Uniswap. Those of us that are familiar, we have Uniswap, PancakeSwap, and others. So for this one, unlike the centralized one, there's no middleman. There's no middleman, and the exchange does not hold your private key or anything. Yeah, you are your own custodian. You hold your private keys and all that. So let's look at virtual asset providers, virtual asset service providers. So there are companies that provide services involving cryptocurrencies or digital assets. Ghana recently has passed the Virtual Assets Providers Act, that is 2005, Act 11, for establishing a formal legal framework to license and regulate cryptocurrencies exchange, brokers and wallets, and and wallet providers. So basically, Bank of Ghana and the Security and Exchange Commission are the legal entities that ensures that these acts are being complied with. Yeah. So a company. So let's look at what a company that falls under a virtual asset service provider. So if it performs one of or two or more of any of these functions, then basically the entity is a virtual asset service provider. So it exchanges crypto for fiat like money. So it exchanges one crypto for another. That's also another one. Uh, Transfer crypto between users, participate in ICOs. So those of you that don't understand, that are new to this area, ICO is basically like a fundraising method in cryptocurrency industry where new projects sell digital tokens to investors, typically like an exchange. So we can cite examples like that of Bitcoin and Ethereum. So examples of the virtual assets service providers, Binance, Coinbase, MetaMask, Yellow Card, and products which are very popular in Nigeria. Okay, so let's look at AML for digital assets. So AML simply means anti-money laundering, and it refers to laws, regulations, and procedures designed to prevent criminals from hiding illegally obtained money and making it appear legal. So there are three stages of money laundering in crypto. The three stages are placement, that is getting the dirty money into the system. So for that, the goal here is turning physical cash or stolen funds into digital assets. So, example, a criminal may take 100,000 CDs from a scam or buy Bitcoin from a peer-to-peer trader at an unregistered kiosk that doesn't ask for an ID. So the next one is layering, hiding the money. So this is where the dirty money is cleaned. So the goal here is moving the money through many loops that investigators get confused, or basically to hide the money from investigators. Mhm. That's what we call layering. And the integration stage, sorry, the integration stage is getting the clean money out into the system. So the goal here is move the money back into the real world, like using it to buy cars, houses, and others. Yes, so basically that's it. Let's move to AML risk factors in digital assets ecosystem. Okay, so pseudonymity risks also, pseudonymity here means user operates under a public identifier, right? Example, the wallet address instead of their rare names. So blockchain addresses do not show rare names. They show wallet addresses. So in the absence of a clear AML policy, anti-money laundering policy, someone receives stolen money, he or she can convert it to Bitcoin, then send it to another wallet. The wallet address is visible, but the rare identity is hidden. This makes tracking criminals harder without proper AML system. And we also have cross-border transactions. So digital assets move across countries instantly. So a person in Kumasi here may send USDT to someone in Abidjan within minutes. With no traditional banks involved, they can bypass normal AML checks if not registered properly. The platform the person is using is not registered properly. And decentralized finance challenge also means that these DeFi platforms do not always have a central company controlling them. So someone swaps token on a decentralized exchange where there is no KYC or KYC may not be required. No central party may report suspicious activity. This creates regulatory and AML challenges. So let's look at some of the rules of exchanges and virtual asset providers. So basically what they can do is implement an AML policy, So the example of an exchange that has that is Binance and Coinbase. So they verify customers' identity, like taking a picture, and they verify your identity using your ID card. They monitor suspicious transaction and report suspicious activities. They keep transaction records, and if a user wants to withdraw larger funds, the exchange may ask your source of funds, like your proof of identity or proof of address, and the use of the FATF. And for those that are new, that doesn't know FATF, FATF is an international policy making body that sets uh, international anti-money laundering standards. And yes, so the FATF traveling rule requires exchanges to share senders and receivers information for live transaction. So if someone sends 5,000 Ghana cedis in crypto from one exchange to another, the sending exchange must share customer details with their receiving exchange. This reduces anonymity in regulated platforms. So this helps with the pseudonymous risks that we talked about earlier. So with this, we are coming into to an end, and I will want to cite some use cases that AML policy may be required. So the first example has to do with, let's say, a student is offered 500 cedis to open a Binance with their Ghana card and give the login details to another person, another in another country, someone in another country. The person uses that account to watch stolen money. What do we think the AML implications are? What do we think? What would be the implications of the AML implications? What do we think it will be?
All right, please can I give my input?
Yes, yeah.
All right, so I think first of all, the students will be held responsible for the transaction.
Yeah.
If possible, tracked and sanctioned, whether fine or jail. That's what I think.
Yeah, thank you very much. So, yeah, clearly you can tell from our brother's explanation that the student has only becomes a money mule. So when law enforcement begins to investigate the theft, the trail will lead back to the student, because on a Binance platform, there is KYC, know your client, you have submitted your ID, proof of address and all that. So the student will be held responsible, like our brother said. So the second one has to do with the company with the 3CS specialists. Computers are locked by hackers who demand payment in Bitcoin. So what will be the ML implication? Yeah, please, our time is almost up, so let's.
All right, sure. So can I come in? I don't.
Yes.
Okay, so so for the computer, for the fraudsters or the hackers, it's they are going to be definitely traced, and they will also be sanctioned, since the blockchain can be traced, or the accounts they had the KYC done before the accounts were opened.
Thank you very much. So yes, that's it. Once the company pays the money, though the money is gone, the money is immutable. But however, because the blockchain platform is transparent, 3CS specialists can watch the wallet and see exactly which exchange the hacker eventually uses to try and cash out. So yeah, basically, thank you very much. Yeah, so why AMD forensics is a solution. So with AMD forensics, is bridging the gap through training and certification, provision of service like anti-money laundering services, blockchain intelligence, digital forensics, and audit service, and provision of technological solutions like CAS, and partnership with Chainalysis and all that to help solve crimes in the digital landscape. So with AMD forensic, the solution the, yeah, and this forensics is the solution because we provide the eye to see the trail, the tools to follow it, and the training to ensure that we have enough specialists to keep the African digital economy safe. So with this, I'll bring this session to an end. Thank you very much. If anybody has any question, President Max.
All right, so thank you very much, Adontin, for the informative and insightful presentation. We're wrapping up, but before we close, I'd like to know from everyone the one thing that you learned tonight. And if you also had other concepts that you couldn't fully understand, you can also bring it up whilst Adontin is still with us to share further insights. But I'd like to start with Rachel. Can you share with us what you learned tonight? Is Rachel with us? All right, looks like Rachel is not here. So case tonight.
Hello? Hello? Hello?
Is case stream with us?
Yeah, Rachel, you can speak.
Sorry, please. My network was bothering me a bit. Okay. So actually today my take home is I've learned that blockchain has two wallets, right? Which we have the private and the public. So I got to know that the private one is like a secret code. Let's say for instance your mobile money pin or your bank pin and other stuffs that is related to something that is secret, that you should keep it a secret, not to be spread outside. And I also learned that the public key is also like more like your um bank number, like which you can give to someone to transfer money to you, or maybe your mobile number, like mobile money number for people to transfer money to you. So that is my take off for today, and I think I learned a lot. Which was very, very inspiring, and I really thank Adontin for this beautiful presentation.
All right, thank you, Rachel, for your contribution. So we'll proceed with Ophebia. Ophebia, I'd like you to share with us what you are taking home tonight.
Oh, yeah. I mean, based on my question, I think I've learned the general idea of what a chain is, at the very least. But generally, like Rachel said, it was insightful. It was good to get some clarity about some terms that I've been dealing with in my work. And so, yeah, looking forward to the next one.
All right, so with that, I would wrap up tonight's bootcamp session. I must say that I appreciate everyone's participation and contribution, and also look forward to continue the discussions in our next session. That's next week onwards. And so on this note, I'd like to say thank you and bye to everyone for making time.
Okay, thank you so much, Adontin and Nana.
Thank you.
So please remember tomorrow's event. That's 10 a.m. Ghanaian time. The link will also be shared in the group. So the flyer has the link, so you can invite people as well. And if you want to know more about the program, you can also join. It's just 1 hour, and you get to meet the people that are going to be conferred tomorrow. And then the next bootcamp class will be next week, Wednesday. Thank you so much, and do have a good night rest. Bye, everyone.
Bye.